Welcome back. Today we're going to talk about the economy and the stock market and the relationship between the two. So first we have Wall Street week ahead, S&P 500 eyes 7,000 mark as investors look for upbeat end to strong 2025. Let's go ahead and take a look at your S&P 500. Your S&P 500, I am on the futures contracts. These ones are just open longer than the normal SPY chart. As you can see, you broke up out of this pattern, so you are going to most likely go up higher. It would be best if the market came down and retested the line here and then go further up. But if you zoom in, you're almost on the dot. You're at 6,980. Usually this moves a couple hundred points in a day, but we are towards the end of December, so not as much movement right now. But still a chance for a wick to just wick up, hit 7,000, call it a day. I'm also going to show you your cues. This is for your tech stocks. You can see they are all in a nice, beautiful pattern. We're hitting some resistance today on this trend line here. We may go down lower. It just bounces in there until it breaks out of one of those lines. And nothing has happened yet, so we just keep waiting. As the yen, weaker in thin trading as traders stay alert to intervention risk. Well, first let me show you the chart. Here is your US dollar and Japan yen together. So when this one goes up, you have a weaker yen. When the yen's weaker, that means for Japan, it's harder to get their hands on like commodities, goods, services, because it's more expensive because their yen is not worth that much compared to everything else. The baseline is the US dollar. So the intervention that they're talking about in the trading is the Bank of Japan pulling out money from the economy. Because right now you have a weak yen because there's too much of it. So what the Bank of Japan does is they just pull some out, so then you have less yen in the system, so then it's worth more, which will make this chart go down. But since we know charts, this is your weekly time frame, by the way. You'll go down, most likely hit this trend line here, and you are above gravity. So you have support to the upside. Most likely, you will bounce off of this trend line and continue to go higher. I have a price target here saying where it's most likely to go. And Cuddy is speeding up its supply chain to turn around sagging sales. So here we go into the market area. The markets are struggling a little bit right now, and I will show you right now in the charts. This is your manufacturer's new orders. Focus on the blue line here. Every time this goes below zero, which is the flat black line across the chart, means that there's no new orders. So you want to stay above it. You can see here 2020 went down below, a little too far down below. So it got marked with a gray bar, which was recession. Over here in 2008, same thing. Over here, you guys are like, why didn't they call it? I don't know. They just don't call it sometimes. But you can see it was bad. Over here, we're on the far right for today. We are getting close to zero. Earlier in the year, I think this is 2022 right here, we were below and then we came back above, so they didn't call it too close. And now we are going down. We're getting close to the zero, so not many new orders are being put in place. To give you an even bigger picture of the orders is when you have more orders, you have more shipments. This one, the Baltic Dry Index, measures your shipments. So over here, the blue green line shows the start of 2025. You started going up, you had this pattern, you started bouncing in this channel all the way up. Beautiful, but now towards the end of the year, on the weekly time frame, we broke down out of this pattern, which means weakening shipments. When you have less shipments and less orders, that means economy not so good. And why is that, Gordo? Well, I have one more chart to show you. Your consumer opinion surveys. So this is your guys' finances. This is how confident you are in spending. Are you comfortable spending out there? Are you not comfortable spending out there? You have 2008 right here at this line. Guess what? We're below it. So what does that mean? You guys aren't spending. And with no more spending, you don't have any new orders. With no new orders, you have less shipments. What does that mean? Global economy's in the dumpster and we're going to catch on fire soon. But the stock market is up. We'll talk about that right now. So your stock market is up, but your economy's down. What does that mean? I thought the stock market represented the economy. So you can think of the stock market as the last guy to the party. So you guys are partying, everybody shows up on time, party's almost over, and then right at the doorbell goes off, and in comes the stock market. It's the last guy to show up. So that's how it is. It's not completely unrelated. It still has its like faint string holding on, but it doesn't represent the economy. And next week we will keep talking about the charts. We'll keep mapping them out. We'll keep seeing predictions. And I will see you guys next week, Monday.